what the heck is the matter with Deckers Brands, DECK, the maker of UGG boots and Teva sandals, among a number of other footwear brands. This company had been making a remarkable comeback over the last 18 months, and its last quarter reported over the summer was a thing of beauty. Then Deckers reported last night, and though the company handily beat Wall Street's estimates, it was a picture-perfect quarter, delivering a 14-cent earnings beat off a $1.03 basis, with higher-than-expected sales up 24% year-over-year. The stock got crushed today on a very big up day for the market. Dropped $6.54, or 7.4%, in a single session. Why? Well, here's some of the speculation. Some people say Deckers' forecast for the holidays was somehow seen as disappointing. And there was some commentary on the conference call about some tough same-store sales numbers ahead. So was this the sell-off? Was it that was right? Was it justified? Or perhaps the stock's been unjustly punished, creating a unique buying opportunity? Got to find out. Let's take a closer look with Angel Martinez, the chairman, president, and CEO of Deckers Brands, to learn more about the quarter and his company's prospects. Mr. Martinez, welcome back to Mad Money.
Hi, Jim. Good to be with you.
All right, and I'm going to cut right to it. I read through the quarter, and I know the power of not just this is a different Deckers than I'm used to. This is Deckers Brands. UGG boots, very strong. Lots of other brands now. This stock got punished today. Was it a fair punishment?
I must say, Jim, I'm three things. I'm perplexed, I'm befuddled, and I'm stymied. Here we have a quarter in which we beat last year's results in both earnings and revenue by 20%. We have guidance for the fiscal 15 of 15% revenue increase and almost 16% earnings increase. We're up in unit sales for the quarter. Our omnichannel strategy is performing. Our new product is well received. It is selling through exceptionally well. So in my mind, those are all good things. So I have a little perplexed about why that's a negative today.
Well, I mean, I have to say, let's take an example of a person who likes your stock. The Koenig from Jefferies says the outlook is a little light. Despite the large beat in 2Q, which you just discussed, management raised fiscal year 15 earnings per share outlook just 5 cents, effectively implying a downward revision to guidance for the second half on both the top and the bottom lines. Is it really an effective, is that really true?
I don't see it that way. I think our guidance speaks for itself. 15% revenue increase, almost 16% earnings increase doesn't sound like a down expectation to me.
Well, I know that Wells Fargo was saying European comps were down 10% largely due to warmer weather, and that they're concerned about the weather. But we're going into the winter, not to the summer.
That's right. And the other thing to note, Jim, is that our product line is the most diversified product offering that we've ever had. We outperformed our expectations even for the summer product line that we've had. Unit sales are up year on year. We've had just an exceedingly well-received product line from consumers, and we haven't even hit our prime selling season yet. So we're very bullish. We're very optimistic. We feel that we're doing things from a marketing perspective to drive consumers to both our direct-to-consumer channel as well as our wholesale partners. The marketing spend is just kicking in. That's really just starting. Actually begins middle of November. So it is a very early stage in the game going into our prime selling season.
Let's talk about away from UGG boots. There's some things coming up that I think people should realize. You're talking about putting the Hoka brand specialty running shoes in. You expect that distribution. Sports Authority, Finish Line, Hibbett starting January 2015. A quarter where a lot of people might think, well, you know what? That's the tail end of UGG boots. Would to me say it's the beginning of another set of brands that have really taken off this quarter, because the numbers for those brands I just mentioned were extraordinary.
I think our Hoka numbers continue to perform extremely well. We are going to be now in the beginning of January in over 100 stores in a much broader distribution than specialty running for the Hoka brand. Our Sanuk product and our Teva product continue to perform well, and that's going into their primary selling season in the spring. So it is, as I said, I think it's a little bit perplexing, and we fully expect to beat expectations as we tend to do in terms of performance and execution. And that's our mission, and we will do that.
I want to make it clear from your holiday media plan launches November 17th, runs until December 28th. I cannot believe that you were actually effectively guiding down, given that that media plan is going to be so big and you're going to be very visible in the next couple of months.
This is the time of year I look forward to. Again, a diversified product offering this year. In past years, if you go back 3, 4, 5 years, we're very dependent on our classic product. But our fashion product and our cold weather product has just really come along. Consumers are already voting. Obviously now, as winter months kick in, we're in prime position, particularly against all of the competition. We are still, with the UGG brand, the most desired brand in the holiday for gift giving. We have been the most researched and Googled product on the web in the last few years. So consumers have a love affair for this brand that really kicks in as soon as the weather gets a little crisp.
Well, you know what? I'm glad you came in and made it clear, because it's very rare that I see a quarter where there's so many congratulations, and then people don't rally behind it. And I think it's a mistake. I'm with you, Angel Martinez, Chairman, President, and CEO of Deckers Brands. Thank you for coming on the show, sir.
Thank you, Jim.
Look, you get a discount. Very rarely you get a discount to a quality company going into the most important season for the company. I say take it. Mad Money's back after the break.